Was $124,000 at the top of the cycle? Only if you hate freedom. Did you just miss it? Probably not. Because relax, guys. You haven't missed out on anything. According to the data and the analysts, you have not missed it. We still have fuel left in the tank. We'll be unpacking the goods, finding the proof that crypto is primed to go a heck of a lot higher before things get bad again. Because they'll always get bad. A bear market will come. But not for a while, and not at these prices. Stick with me as we dive into the charts, the trends, and the hard data to show you that we still have not reached the end of the road and that there's a lot of fuel left in the tank. So, some say this bullish momentum is about to pop or that it's already popped. People, every time there's a 2% dip or 10% dip in the market, everybody loses their effing minds. The everything bubble is here. TradFi and crypto could burst like in the late 1990s. We are on the precipice of oblivion. But ARK Invest CEO and Bitcoin bull Cathie Woods isn't buying it. Her take, we've still got plenty of runway for this bull market. In a recent CoinDesk interview, she drew a very sharp contrast with the .com frenzy. Now, back then, money flooded into basically anything with an internet label. Skyrocketing IPOs, reckless speculation, and tech that really wasn't ready. Pets.com, of course, being the poster child of that era. Hype drove the market, not real progress. Today looks a lot different. Breakthroughs like AI are changing the game completely. This is seriously revolutionary technology on our hands right now. Blockchain, healthcare, big things are afoot here, and it's got way higher to go. Take genome sequencing. Cost $2.7 billion in 2003. Now it's just $200. Yeah? Crazy. Scalability, not bubble excess. Not yet. It's going to come. Cathie also notes a key shift in market psychology. During the .com era, wealth came easy. Just throw darts and hit gold. Now investors are climbing the famous wall of worry. Capital isn't flooding in blindly. It's still cautious. It's still measured. There's still wounds that need to heal. Increasingly, money is being directed toward crypto and blockchain as they integrate into traditional finance. We've seen the big success of like the Circle IPO as a great example of that. And I agree with Cathie here. In the year 2000, only 6% of the world population was using the internet. And today, 66% of the world population is using AI on a regular basis. Crypto, still pretty small actually, at 6.8% global penetration. It's going to get to 60%. Are you ready for that ride? But here's the kicker. According to Blockware Bitcoin adoption report, crypto adoption is actually outpacing the internet growth curve. Now, something we've talked about many times here on the channel, but that's a news source telling us about. Now, if the trend continues, we'll have over 10% of the global population on chain by 2030. It's a lot of potential. That's the future. But let's zoom back to the present. Now, honestly, I think that's not even bullish enough. A lot of other estimates have it going way higher. Think about all the apps that'll end up using this in the background for stablecoins and stuff. Everyone's going to be on the blockchain, man. The .com bubble was fueled by speculative money chasing fads and companies that had no profits to show. Today's market doesn't look like that. Instead of being dominated by just retail gamblers, it's being steered by the titans of finance. We have people like BlackRock out here, Fidelity, the biggest asset managers in the world, institutions that not only understand the cryptocurrency markets, but are generating real revenue, bringing crypto to the masses, making it go mainstream. The BlackRock Bitcoin ETF is one of the most successful ETF launches ever in the history of ever. It's insane. Now, before we break down the rest of the story here for you guys, if you are trading crypto coins, I know that's you. You're trading crypto coins. You need a great place to do that. Somewhere that's going to respect your privacy, respect your freedom, not do any KYC, not need a VPN, be able to anyone anywhere. That place is a bit Unix. Okay, that's where I'm doing a lot of my futures trading these days. You can join me over there if you want. Here's some great deals to get you started too. Use the link down below, and exclusively with this link, you'll get the following deals. 30% off your trading fees to go straight to VIP level 3 for a trial. You're also going to get $400 in deposit bonuses. Deposit $2,000 or more, you get $400 cash back money. And the trading bonus is just absolutely insane. It's up to like $8,000 in trading bonuses. The more you trade, the more cash they're going to put back in your account. It's awesome. Check it out. Link down below. Thank you very much. Okay, now back to the topic at hand. For those of you who put more weight on charts, take a look at this one. Got some good charts for you, okay? This is the total crypto market cap. Right now, the total is in price discovery after breaking its previous all-time highs. I know there's been a bit of a pullback in the past few days, but we've had a big break here, okay? So the big question is, how high can it go? You know, I'm not in the crystal ball business here, but we do have possibilities. We do have projections that can be made. In the last cycle, the market cap reached the 4.236 extension. That's wild, man. That's wild. Those are crazy times. If we hit that level again this cycle, we are going so much higher. Obviously, there's no guarantee we get that far. So what's more realistic in the near term? Well, at around $3.8 trillion, we're still about $500 billion shy of the 1.618 target. Here's where another bullish signal comes in. Do you see that cup and handle pattern forming up right there? Oh, interesting. Its breakout target sits just above the 1.618 level, pushing the total over 4.5 trillion. Nice. We'll get to the 2.618 and the 3.618 later, but that's a first good target, isn't it? Look, we can doodle on charts all day, but let's be real. We also need catalysts to keep the bull run alive. We need new buyers. We need liquidity coming in, new places for liquidity to come from. And right now, we've got a lot of that going on. Trump's tariff threat is one of those proverbial monkey wrenches getting tossed into the market. But so far, the market seems to have priced in most of that scary stuff, and it's kind of going okay. Now, it's giving the Fed reasons not to cut rates, which is throwing a bit of cold water on the markets to an extent, especially since job markets are weakening, housing markets are trashed, all that kind of stuff. But since Bitcoin is now tied into Wall Street, whatever shakes TradFi inevitably ripples into crypto too. But here's the twist. Despite all of that, fund managers are turning more and more bullish. And remember, these aren't your average REIT. It's not your Uncle Joe, okay? Uncle Joe having a six-pack. I'm going to buy some Bitcoins a week, man. No, ain't Uncle Joe. Shout out to all your alcoholic Uncle Joes, by the way. Anyway, fund managers are the ones with serious capital to place in the markets, and they're doing that. The deep pockets that can actually move markets, and they are leaning bullish right now. So it's time to pay attention. According to the latest Bank of America survey, investor sentiment has surged to its highest since February. Cash levels are down to just 3.9% of assets under management, which maybe says we're a little bit overheated in the short term. But this is a historic low. It shows that managers are basically all in on risk assets right now. What could go wrong? Shit. Anyway, equity allocations are sitting at a net 14% overweight, the strongest positioning we've seen all year. Even recession fears are melting away. When was the last time we talked about a recession? Maybe nobody talking about recessions anymore. Get out of here with that bullshit. Only 5% of managers expect a hard landing, while 68% predict a soft landing, and 22% are calling for no landing at all. Either everybody's hilariously wrong, or we're going much higher. Emerging markets are also seeing a big bid right now, showing a stronger risk attitude in markets from investors at 37% overweight, the most bullish stance since early 2023. In short, Wall Street is loading up on risk. They're not hiding from it. They're running straight into it. Billions and billions of dollars backing them. And when traditional capital goes risk on, crypto is bound to feel the tailwind. We're already seeing that. All the crypto treasury asset companies, the IPOs for crypto are going insane. The money's there. Another reason was explained by Caprioli founder and macro analyst Charles Edwards. His chart reveals that 80% of the time in the last decade, when Bitcoin long-term holders' share of supply pulls back from a peak, like it is doing right now, by the way, prices have skyrocketed. Even better, when Bitcoin is already rallying, that success rate jumps to 100%. Fade that at your risk. I know that doesn't all make sense, and maybe it sounds more bearish than bullish, but just hear me out. Essentially, less selling pressure from these holders clears the way for new buyers to push prices sky high. So this pullback we've seen in the market this week could be a signal that the bull run is far from over. Still not convinced? We got more. We got more, guys. Come on. Especially that we started the week in the red this week. It's freaked a little bit people out. But let me give you three more things real quick. First, the Genius Act. TLDR, very bullish for crypto, especially for smart contract blockchains like Ethereum and Solana. Stablecoins are now legit. Big banks are going to launch them. The stablecoin race has begun. And do you know how stablecoins work? They need smart contracts, which means that they need to use a smart contract blockchain, which means that gas needs to be paid. That's for Ethereum, that's Solana, that's massive adoption. It means more revenue, more network activity for smart contract platforms. Second, we have the SEC's Project Crypto. Think of it as the SEC finally giving crypto the green light. Do what it want with crypto. We're all in on it. Let's make America the crypto capital world. Great. Instead of confusing rules, it says straightforward guidelines so innovation and investors can do their thing. They can play fair, play safe, and have a good time. Most of the time anyway. A complete 180 from the previous administration, which was literally trying to kill the crypto industry in America. Third is rate cuts. Now, we've made multiple highs, even as Jerome Powell has insisted on keeping the rates the same, higher for longer. And we've discussed that you don't actually need him to lower rates for the markets to pump even higher. The dot-com bubble didn't need it. We don't need it now either, but we will get rate cuts. The possibility of some rate cuts anywhere from 80 to 100%, depending on where you're looking and who you're asking. This could mean fireworks by the end of the year if he does indeed cut, but he could still hold off. He could still say, you know what? The tariff stuff, we're still worried. We're still not going to do it. So yeah, it might feel frothy. Prices are a bit high. The S&P has been hitting records. Bitcoin's not that far off its all-time high. ETH even did some stuff, man. But every chart, every adoption metric, every catalyst we just ran through screams one thing. We have got a lot of fuel left in the tank, guys. Couple that with regulatory clarity and a 100% chance of rate cuts coming at some point, then this could be the kind of rally where things get a lot crazier than people anticipate. And everyone's watching, wishing they'd bought yesterday. When the pullbacks come in a bull market, you usually want to buy them. Okay, that's it. Thanks for watching.